Hey, welcome to World Code Updates. The news hit like a thunderclap. Mexico had imposed an immediate total ban on U.S. dairy imports, sending shockwaves through both countries and leaving industry insiders reeling. It was September 2nd, 2025, a day that would upend North American agriculture and mark a turning point in the history of cross-border trade. For decades, American milk, cheese, and yogurt flowed south as reliably as the sunrise, anchoring a multi-billion-dollar trade and supporting thousands of jobs on both sides of the border. Suddenly, that cornerstone was gone, leaving shelves empty and supply chains frozen in their tracks. Mexico's government, citing food sovereignty and the need to protect its own farmers, drew a line in the sand, determined to reshape its agricultural future. The shockwaves were immediate. Milk futures plummeted, and panic spread through the industry as uncertainty gripped markets. Washington was blindsided, scrambling for answers as contracts worth billions evaporated overnight, and officials raced to assess the damage. The ban exposed the fragility of international agreements, reminding everyone that trade is only as strong as the politics and trust behind it. For most Americans, it seemed distant, just another headline. But the reality was far-reaching and would soon touch millions of lives. Food prices, rural livelihoods, and the economies of key states were suddenly at risk, with uncertainty looming over every farm and household. This wasn't just about milk, it was a fundamental disruption of a system that had seemed unshakable, a blow to the heart of rural America. The gears of a massive economic engine ground to a halt, leaving workers and business owners in limbo. The silence that followed was filled with the dread of looming disaster, as communities braced for what might come next. The American dairy industry, once confident and secure, now faced an existential threat, its future hanging in the balance. The era of unchecked exports to Mexico was over, and a new uncertain chapter had begun. The question was, what would come next? Could the industry adapt, or would the damage be permanent? The world was about to find out, as the consequences of this seismic decision began to ripple across continents and industries. The crisis was most visible at the U.S. Mexico border, where the scale of disruption was impossible to ignore. Hundreds of refrigerated trucks, loaded with fresh dairy products, sat stranded at closed gates, engines idling and hope fading. Drivers waited for answers that never came, as their valuable cargo spoiled by the hour, turning profit into loss with every passing minute. The U.S. dairy industry lost nearly $2 billion in exports overnight, its largest market gone in a flash, leaving exporters and workers stunned. Stock prices for major dairy companies nosedived, and warehouses overflowed with rejected shipments that had nowhere to go. The just-in-time supply chain, perfected over decades for efficiency, shattered in a single morning, exposing its fragility. A massive surplus of milk flooded the domestic market, sending prices into freefall and forcing stores to slash prices in desperation. Farmers watched their income collapse below the cost of production, facing mounting bills and an uncertain future. The industry, already operating on thin margins, now faced a death spiral as debts piled up and closures loomed. Washington threatened tariffs and legal action, but Mexico stood firm, refusing to yield to pressure. Diplomacy moved slowly while the industry bled money by the hour, with every delay costing millions more. The crisis revealed a vulnerability long ignored: America's over-reliance on a single export market for its dairy industry. What was once hailed as a triumph of trade now looked like a massive liability, a risk that had gone unaddressed for years. The American government, caught off guard and unprepared, scrambled for solutions as the crisis deepened. The billions once celebrated as economic success now represented a gaping hole in the economy, with losses mounting daily. The fallout was just beginning, and the true cost of the crisis was yet to be fully realized. The dairy industry was on the brink, facing an uncertain and perilous future. In America's heartland, the ban was a personal catastrophe. Multi-generational family farms in Wisconsin, California, and New York suddenly faced ruin. Every gallon of milk became a step deeper into debt. Farmers confronted gut-wrenching choices: sell their herds, lay off workers, or face foreclosure. The crisis rippled outward. Processing plants cut shifts, small businesses closed, and rural economies faltered. The emotional toll was immense, with anxiety and despair settling over entire communities. Dumping thousands of gallons of milk became a tragic symbol of the crisis. Farmers, known for resilience, now felt betrayed by a system they trusted. The collapse wasn't just financial, it was a blow to identity and hope. The heartland was in crisis, and the future had never looked more uncertain. To grasp the crisis, we must look back to NAFTA's legacy. NAFTA, signed in 1994, dismantled trade barriers and created a vast North American market. U.S. dairy exports to Mexico exploded, transforming a trickle into a torrent. American farms, with their scale and efficiency, became Mexico's primary supplier. Mexican consumers gained access to affordable dairy, while U.S. farmers found a reliable outlet for surplus. The relationship seemed symbiotic, free trade at its best. The USMCA, which replaced NAFTA in 2020, preserved this dynamic and encouraged further investment. Producers tailored operations for the Mexican market, deepening dependency. For over 30 years, the flow of milk south felt permanent, but this reliability bred complacency and masked growing vulnerability. The industry's export strategy rested on a single foundation. Few imagined what would happen if that foundation cracked. The decades of success created a blind spot. When the ban came, the industry was unprepared. The NAFTA legacy was both a blessing and a curse. The U.S. dairy industry learned the hard way. Don't put all your eggs in one basket. Mexico was the easy answer for surpluses. Close, hungry, and accessible. This convenience led to strategic laziness and a dangerous lack of diversification. Processing plants, logistics, and products were all tailored for Mexico, making the industry inflexible. When the market closed, specialized plants couldn't pivot to new buyers overnight. Warnings about overdependence were ignored in favor of short-term profits. The industry lobbied to preserve access, not to open new markets. Now, the consequences are clear. A single disruption brought the system to its knees. A resilient industry needs a balanced portfolio. America had Mexico and little else. The very thing that fueled growth became the instrument of downfall. From Mexico's perspective, the ban was years in the making. Food sovereignty had become a rallying cry. Control the food supply, protect local farmers. U.S. dairy, cheap and abundant, had undercut Mexican producers for decades. The government's new policy offered support, loans, and guaranteed prices to rebuild the domestic industry. It was a political and cultural move, reclaiming pride and economic control. President López Obrador framed it as standing up for the countryside and against foreign dominance. The risks were real, higher prices and potential shortages, but the goal was long-term self-sufficiency. Mexico sought new partners but was willing to endure short-term pain for future independence. The ban was a calculated gamble, rooted in national pride. For Mexico, it was a declaration of dairy independence. As the U.S. reeled, Canada saw opportunity, especially in Ontario. Canada's supply management system ensured stability and allowed a rapid strategic response. Ontario's dairy sector moved quickly, negotiating with Mexico and ramping up production. The government and industry worked together, highlighting quality and reliability. New jobs and investments followed as processors expanded to meet Mexican demand. But Canadian producers were cautious, determined not to repeat America's mistake. Diversification remained the goal. Mexico was a partner, not the only one. Ontario's approach seized the moment, but with strategy and restraint. The crisis was a lesson in both opportunity and caution. The crisis is best understood through the lives it changed, real people whose stories are often left untold. In Wisconsin, John Peterson, a fourth-generation farmer, watched his dreams unravel as the world shifted around him. His milk, once destined for Mexico and beyond, now had no market, leaving tanks full and hopes dashed. Forced to sell part of his beloved herd, John faced the loss of a legacy built over generations, a legacy he hoped to pass on. "We did everything right," he says, voice trembling, "but now the market is gone and we're left with uncertainty." Meanwhile, in Jalisco, Mexico, Elena Rodriguez's small farm found new hope as the tides of trade shifted. For years, she struggled against cheap imports, barely scraping by, always worried about the next season. With government support and guaranteed prices, her farm is thriving for the first time, bringing stability to her family. "We can finally breathe," Elena says, smiling. "We're proud to feed our own people and see our children's future brighten." John's story is one of loss and anxiety, a victim of a system that collapsed almost overnight, leaving him searching for answers. Elena's is one of renewal, her family's future now secure, her children able to dream bigger than before. The same policy that devastated one farmer brought salvation to another, showing how interconnected our fates can be. These stories reveal the human cost and the unexpected opportunity of global trade shifts, echoing across borders and generations. For John, the crisis is a daily struggle, a test of resilience and hope in the face of adversity. For Elena, it's a new beginning, a chance to build something lasting for her family and community. The border divides their fates, but their stories are forever linked by the invisible threads of trade and policy. In the world of trade, one nation's pain can be another's rebirth, a reminder that every policy has a face, a family, and a future. The dairy crisis of 2025 will be remembered as a turning point. It exposed the dangers of over-reliance and the need for true resilience. The Canadian model showed the value of stability and strategic planning. For the U.S., the future means diversification, new markets, stronger supply chains, and better safety nets. Food sovereignty is now a global force, reshaping trade relationships everywhere. Partnerships must be built on more than transactions. They require trust and mutual respect. The crisis forced everyone to adapt: American farmers, Mexican policymakers, Canadian producers. The North American agricultural landscape is forever changed. Those who learn and adapt will thrive. The lesson is clear: resilience and diversification are the keys to survival.